The market for artificial intelligence is massive. To put it in context, PwC, which is one of the world's leading accounting firms, suggests AI could add nearly $16 trillion of value to the global economy by 2030. That sounds like a huge number, right? Let me put it in context. 16 trillion for AI. The global marketplace for defense and military spending, 2.5 trillion. So this is enormous. If you're sitting there thinking, I want a slice of that, this is the podcast for you. Before I get into it, this episode of the Australian Finance Podcast is proudly brought to you by BetaShares, one of Australia's leading ETF providers, and as it turns out, a provider of ETFs that invest in companies that have an AI and technology focus. Stay tuned as you learn more about ETFs and how to invest in them for that AI boost. In June 2025, Nvidia became the world's largest company by market capitalization. Over $3 trillion is what Nvidia is worth just by itself. Nvidia is the world's leading designer and creator of GPUs, those little things that go inside those massive server farms that help ChatGPT respond to you quick and accurately. Nvidia is only one of so many companies around the world capitalizing on the AI boom. It's at the tip of the spear, so to speak, alongside other companies like ASML, which is the Dutch company that does lithography machines, which kind of sketches all of the little bits and pieces onto those tiny little microchips that end up in your mobile phone or in big server farms and cloud computing right around the world. There are many companies just like that stand to benefit from the AI revolution. Just think about your own workplace, school, or university. Think about how AI is going to transform everything that you do and that organization does. The work that maybe 50 people would do before can now be done by 1 or 2 people with an enhancement of AI. Creative fields, if you use Canva, Adobe, Figma, these types of things, you'll see AI everywhere. If you're in construction, you'll see it in your project management software, and who knows what comes next. If you're in areas like law and financial services, banking, you're in any of these industries, AI is going to play a massive role in the way you work and the way consumers and other customers interact with your organization and your business. Everyone stands to benefit from the rise of AI. What's crazy to think about is, obviously, does AI pose a threat to my wealth? Because will I lose my job? Will I not be able to invest in the first place because I don't have any salary coming in the door? Through every major cycle of innovation in human history, more jobs have been created out of the innovation than less jobs. If you go back right to the beginning of time, it seems Plato, the philosopher, once said that once we learned how to write, civilization was doomed because, in effect, why would people need to remember anything anymore if everything could be written down? Well, that was wrong. And here we are today writing down almost everything that we need to remember. So that was wrong. And then imagine like the light bulb or even the steam engine, railroads, horses going to cars. So many different industries emerged through time. And indeed, they're going to emerge in your lifetime. If not, they're emerging right now. And you can capitalize as an investor. The key thing is here that you've got to be aware of what's happening around you and you've got to invest proactively. So you can do that through ETFs, you can do it through individual shares, and you can basically take advantage of it in so many other ways in your career as well. In this video, I want to focus on some of the ETFs that will benefit from this trend, and you as an investor can also take a look at these and pop them on your watch list. Before we get into that, just remember that any of the information in this video is general in nature, and you should read the ETF's PDS, that's Product Disclosure Statement, before investing. It's just sensible that if you're going to put your money on the line, find out what the ETF does. Sounds like a pretty good rule of thumb. There's no doubt that even in investing, AI is going to change the way you do it. Whether it's helping you research companies, whether it's helping you find a list of ETFs, whether it's helping you understand how to analyze an ETF. It's interesting because AI and things like ChatGPT are actually one of the most popular ways that people find out about our ETF investing course and end up taking the course, which is crazy to think because it's only been around a couple of years and now people use it to find the course. So it's kind of wonderful in that way as well. But if we think about ETFs, there's probably two approaches that you can take. Number one is you can go for an ETF that's quite broad and captures a lot of different companies inside it. Probably the most popular one here in Australia for this type of thing is the NDQ ETF. That's ASX NDQ. It's the BetaShares Nasdaq 100 ETF, and it invests in 100 companies listed on the Nasdaq Stock Exchange. I'm thinking of companies like Microsoft, Google, Apple, Nvidia, these types of businesses. Take, for example, Microsoft, also one of the world's largest companies. That is around about a 50% shareholder in OpenAI, the creator of ChatGPT, and arguably probably the first innovator in this field. I love it when companies go from becoming a noun or a name to a verb. One of the good ones to think about is, remember when you used to say, just Google it? Why don't you just Google it? In Australia, you might have said, why don't you just Afterpay it when you were paying in 4 installments? Now people are saying, well, just ChatGPT it. And people find answers to all of the questions that they would previously use Google for. So many of them are now coming through ChatGPT. So already we've seen this massive shift. And by investing in a broad-based ETF like NDQ, you can get exposure to the biggest companies in the world, and in particular, many of the technology companies that are leading the world. Of course, in the Nasdaq 100 ETF, you also get things like Costco, which is an absolutely wonderful business, one of my favorite businesses on the planet, but it's not necessarily something that you think of when you think of AI. I'll come back to that in a minute. Another approach is to use a really targeted exposure to a particular industry. There are many ETFs here in Australia that use both AI as a focus, but also technology, because technology companies will also benefit from AI, generally speaking. Let's take, for example, the GlobalX FAANG Plus ETF. This is one of the most popular ETFs from GlobalX. And this ETF just invests in the top 10 companies that happen to be, Facebook, Amazon, Apple, Netflix, Google, all of those businesses from yesteryear, plus a few more. They are massive technology companies. And what we've seen in recent years is all of the big technology platforms. Think of companies like Google with its GCP, Microsoft with Azure, Amazon with AWS, and so many other businesses that dominate the cloud computing space. What they've actually been doing over the past 10 to 20 years is something very unique as it relates to AI. In order for you to ask ChatGPT to do something for you, a query or a message has to be sent to a cloud computing server that runs all the algorithms that then sends you a response. So the cloud computing that sits behind the scenes is pivotal. Inside of that, we have all of the technology from Nvidia and so many other businesses that feed into creating the cloud computing or the server farms that are required to process the AI. But what's really interesting is if you think about companies like Amazon, Microsoft, Google, even Alibaba, these types of businesses, what they've done over the past 10 years is invested tens of billions of dollars, if not hundreds of billions of dollars, into building out their cloud computing infrastructure. They call them hyperscalers around the world. And these are the big cloud computing server farms that make all of your internet usage possible. And what has actually been happening, and the strategy behind this, is that by investing in infrastructure like that, these companies are saying, we don't know what the next big innovation is going to be. But what we do know for sure is they're all going to need cloud computing and massive processing power. And indeed, things like ChatGPT, even DeepSeek in China, or Gemini, Facebook or Meta's Llama, or even Grok require loads and loads and loads of cloud computing. So by investing in something like NDQ, which gets you the top 100, or FAANG, which gets you the top 10, you're going to get a lot of those types of businesses in that mix because they are the biggest companies in the world anyway. So you're going to get exposure. This is good news if you don't want to go and sift through all the different types of ETFs. If you own the S&P 500 ETF, which is IVV from iShares, or if you own, say, for example, VGS from Vanguard, you're going to get all that mushed in there as well. But let's say, for example, you want a more pure focus. You want to invest in just the companies that are really focused on technology. There are ETFs just for that. Even here in Australia, there are technology ETFs like ATEC from BetaShares, which targets just technology companies. They're not necessarily cloud companies. They're companies that are using the cloud to make their servers and AI more efficient across their entire business. So they stand to benefit. It's kind of like investing in the picks and shovels in a gold rush rather than the gold mine, which might be Nvidia, for example. So trying to invest in those businesses that benefit from that. Another way you can do it is you can use ETFs with those specific focus. So there are two that I'd like to call out right now, which is AINF from GlobalX and GXAI. AINF is trying to find companies that just provide the infrastructure for the AI global marketplace. So if you're trying to find companies that create the cloud computing and create all of the bits and pieces that connect all of the infrastructure that make AI possible, that's an ETF that does that. And then there's GXAI, which is just a broad-based artificial intelligence ETF. Now, obviously, these ETFs have product disclosure statements that I encourage you to go and check out. And for disclosure, GlobalX does sponsor our Australian Investors podcast. When it comes to really targeted focused thematic ETFs or even rules-based ETFs, I prefer to keep them in my satellite exposure and off to the side. So that would be smaller allocations, whereas something like an NDQ, even an ATEC, maybe even a FAANG could go in the core portfolios, maybe a slightly larger position. Also really interesting is an ETF called HACK, which is one of the most popular thematic ETFs from BetaShares. HACK is an ETF that targets cybersecurity companies. Now, this ETF, just to be quick on it, if it's investing in cybersecurity, you've got to think about this. This is like 2 steps away from AI. You've got the things that create AI, then the use cases for AI, and then you've got the thing that defends against AI. This ETF is the most popular cybersecurity ETF in Australia, and one of the big emerging threats from AI is AI itself. People are spooked that AI could be used for traditional viruses, malware, hacking, and so many other cybersecurity threats around the world. We've seen this just in the last 2 or 3 years here in Australia with massive privacy breaches, companies like Medibank and Optus and so on and so forth. Companies now everywhere around the world use technology. That means they have a responsibility to protect their systems and critical infrastructure. And the companies that do that can be found inside the HACK ETF. So it's a really interesting way to get exposure to the AI thematic without going all the way down into really niche focus. So let's just summarize this bit here. AI, massive opportunity for investors. There is a lot of hype in the system. I don't think it's like a cryptocurrency craze from like 5 years ago. I think it's bigger than that. I think the companies are real. There are a lot of fake companies that aren't really doing AI but try and convince you that they are. If you're in doubt, you're going to get exposure to these great companies through really broad, low-cost ETFs anyway. If you want to be more targeted, you could go into the more niche, kind of thematic or rules-based ETFs that target these types of companies specifically. And finally, of course, you can own individual shares, which give you an opportunity to buy the companies. But obviously, that's higher risk, takes a lot more work, a lot more mental energy. So if you do that, again, maybe that's a satellite position for you. I want to mention a few other things to look for in the ETFs before you go investing like crazy in AI. Number 1, stay diversified. Even though AI may be a huge thing, every company in the world stands to benefit. But by racing in and just investing in one thing, that's a huge risk. It might not work out. You might invest in something that is more hype than actual reality. A good example of this is there were dozens of search engines in the late 90s and early 2000s. It just so happens that Google ended up eating 80% of the market. There were dozens. So you might not have got it right. Cast a wider net. And then once you know, you can zoom in on the ones that are winning. But that may take a few years. So stay diversified. That's probably the single best way to get exposure to AI. Stay diversified. Number 2, don't forget the fees associated with ETFs. ETFs charge something called a management expense ratio, or MER. It's the fee that it's like invisible because it's taken out every day from the ETF and it covers the cost of providing that ETF. Obviously, most people want a fee that's lower. If you're using thematic ETFs, you can expect to pay fees closer to 0.5%, 0.6%. If you're using a broad-based ETF, you're probably going to be looking anywhere from like 0.2% or below even in some cases. So just keep that in the back of your mind. You end up paying more for the more niche style of ETFs. Another thing is most of the AI investing that people are doing right now is investing in the United States ETFs. So these are ETFs that you get here in Australia on the Australian stock market that then invest your money overseas for you. There are a few risks that come with that. Number one is there may be rule changes between the Australia Tax Office, say, for example, and the US IRS. That is underway at the moment. There's been some rule changes around, or there's proposed rule changes at the time of recording around taxation of foreign investors into the United States. Another thing to keep in mind with that is that your returns may be impacted by currency movements. The difference in the Australian dollar to US dollar over time does fluctuate, so that can create risks. Once again, be sure to refer to the PDSs. The final thing that I'll touch on again is to make sure that when you're building a portfolio that you blend ETFs together. So I've mentioned a few ETFs in this podcast that I own or that we own at Rask. Number one is the IVV ETF. Number two is the ATEC ETF from BetaShares. We also own another ETF from Vanguard called VAS, which is just the Australian shares ETF. Now, I love the sound of these other ETFs. I love HAC, NDQ, FAANG. I like all of these types of ETFs. I would blend them with a vanilla broad-based ETF, or ETFs, I should say, and maybe also some other different types of ETFs, so fixed income or bond ETFs. You can find out the full range of ETFs that we own on the Rask website. It's all there for full transparency. But blending them together is the secret. It's not about finding the one ETF to rule them all. It's about how do you put them together in a portfolio. The good news is, as a long-term investor, you are going to benefit so much from AI. You're going to benefit if you're an ETF investor, if you've got superannuation, maybe even in your career, if you use your skills and you sharpen your skills. You might be able to charge 2, 3, 4 times as much as you do at the moment just because you know how to use AI to your advantage. So see this as a massive opportunity for you. And if I haven't hit the mark with any of these things, let me know. Use the comments on YouTube or on Spotify or even in the Rask community. What other ETFs allow you to get this exposure? Which shares are the ones that you should be focusing on? We've done other videos on which shares to look at in 2025 and 2026. Using ETFs allows you to invest in this amazing, disruptive force that's coming, which is AI, without trying to pick individual stocks the whole way through. This allows you to be diversified, do it low cost, and really enjoy your investing in the satellite predominantly of your portfolio and kind of take advantage of the future. If you're looking for more literature on this, there's a great book I would recommend called The Guerrilla Game, Investing in High Technology. It actually was released around the time of the dot-com boom and then the dot-com bust, and it teaches you how to find the types of companies that would allow you to capture the AI race as well. Tony Robbins in his book once said, and this has always stuck with me, which is when you invest via the stock market, you become an owner of the economy rather than a consumer of the economy. If you sit back and you let AI take your job without investing in your skills, or you don't invest money now in the companies that are changing the world, you will fall behind. By investing, even if it's a small amount every week, month, or year, in yourself and in your career and in your portfolio, you are going to take advantage of everything that comes from the AI revolution. Go out there, invest with optimism, be cautiously optimistic, be prudent, but take advantage of this massive opportunity that's in front of you right now. I'm Owen Rask. If you want to get in contact with me, be sure to use the comments or jump over into the Rask community. It's free and we'd love to hear from you. Thanks for listening to this episode of the Australian Finance Podcast. Thanks for watching this episode of the podcast. If you want to hear more from us, you can get daily videos and podcasts on Rask's YouTube channel, or if you want to enroll in a free course on investing, property, business, money, you name it, you can join over 34,000 other students and enroll in a free course on the Rask website. Simply head to www.rask.com.au and follow the prompts. Thanks for watching this Rask podcast.